Did you know that even billion-dollar companies can become victims of fraud? And sometimes the warning signs were visible long before the fraud was discovered. In today's video, I'll share 5 real corporate fraud cases. For each one, we'll answer 3 simple questions. What happened? What type of fraud was it? And what red flags should an auditor have noticed? Now, let's get started with our first case. Our first case is Archer Daniels Midland, also known as ADM. The company recently faced regulatory investigations over its accounting practices. Questions were raised about whether profits in one business segment had been reported correctly. The company later revised some of its financial information. So, what type of fraud is this? This falls under financial statement fraud. Now let's think like an internal auditor. What are the warning signs? First, unexpected profit growth in one business unit. Second, complex accounting entries that are difficult to understand. Third, large manual journal entries made at the end of the reporting period. And finally, management adjustments without sufficient supporting documentation. Whenever financial performance looks too good to be true, it deserves a closer look. Our second example is procurement fraud, which is a major concern. Several organizations have uncovered fake vendors, false invoices, and bid manipulation schemes. In many cases, employees worked with suppliers to submit fake invoices and receive unauthorized payments. What should an internal auditor look for? Let's find out. Look for duplicate vendor records, the same bank account being used by different vendors. Purchase orders split into smaller amounts to avoid approval limits. Always check for round value invoices and repeated purchases from the same supplier without competitive bidding. These are classic procurement fraud indicators. The third fraud is something completely new, AI voice scam. Fraudsters have used artificial intelligence to copy the voice of senior executives. Finance employees believed they were speaking with their CEO. As a result, millions of dollars were transferred to fraudulent bank accounts. What are the audit red flags? Urgent payment requests, pressure to skip approval procedures, request to change vendor bank accounts without verification, payments that are made outside of normal business hours, and instructions received only through email or phone calls without independent verification. Technology is changing and fraud is evolving with it. Next, let's look at expense reimbursement fraud. Many companies continue to lose money because employees submit fake or duplicate expense claims. Sometimes it's a fake hotel receipt, sometimes it's the same travel expense claimed twice. Internal auditors should watch for duplicate claims and missing receipts. Weekend travel expenses without business justification, frequent cash reimbursements, and unusually high travel expenses compared to similar employees. Small frauds repeated many times can become very large losses. Our final example today is cyber payment fraud. Many organizations have reported attackers gaining access to company email accounts. The fraudsters changed supplier bank details. Payments were transferred directly to criminals. What should auditors monitor? Unexpected vendor bank account changes, large payments to new vendors, employee logins from unusual locations, multiple failed login attempts, and disabled multi-factor authentication. Cybersecurity is an audit issue too. Every fraud looks different, but almost every fraud leaves warning signs. Identify risks early. A great auditor protects the organization before losses occur. Like, subscribe, and share. I'll see you next time.